From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for December 10th, 2015. Now today I don't really have a specific trade call or trade suggestion that I want to recommend, but I do want to go through each of the 7 major U.S. currency pairs and talk about what we have coming up over the next few days. As everybody should know, coming up on December 16th, we have the FOMC rate decision. The expectation is that they will be raising interest rates in the U.S., which in essence should cause a rally for the U.S. dollar. Now, over the past several days, past week or so, we have seen the market slumping, the U.S. dollar slumping, a pullback against the U.S. dollar. Now, I might say that this could simply be just a correction before we go into that FOMC. And there's been many times within each of the trends that we'll go across that we see these pullbacks, we see these corrections, and then eventually the U.S. dollar gains the strength back that we would expect to see with that interest rate news and potentially making new highs or lows in the directions of the trend. So let's go through each of the currency pairs and talk about some of those simple aspects of the charts and what we might see over the next 4 or 5 days before we go into FOMC. Starting here on the U.S. franc, of course, overall, fundamentally, we expect that the Swiss franc is a weaker currency than the U.S. dollar, but it is interesting that we've seen a pretty decent slump, a correction again, maybe for the U.S. dollar as it's pulled all the way back down here into the 9,900 level again. Interesting things here on the chart. Let's zoom it in a couple of times, or at least one time. You see this pullback here, all the way over here on the left-hand side of the chart. Let me take this trend line and just move it over here. You can see this little pullback right here. Well, not little, but a pullback right there, eventually making a run. Then we see another correction, another pullback right here, and again, eventually making a run and making a new high for the U.S. franc. So you take those two examples and you see the pullback that we've seen today, and not really any different. Now, what I will say, some similarities, not exactly the same, but similarities, is that each of those times it came down and tested and challenged the 100 period moving average. The first time actually pushing a little bit underneath it, and then just a couple of days later getting back above it. Over here we see it challenging the 100 daily simple moving average, getting back above it and making the new high. So today, guess what? Nothing really new here on the U.S. franc. We're challenging the 100 daily moving average. So the question is, are we going to see it finally make a support base here on this correction and start working its way back up in anticipation of FOMC? Or do we look for the breakdown and a continuation lower? I think today, for the truth, I think today we would expect to see some support here. We also have Fibonacci here on the chart from the low, the last low that we see there, to the current resistance high, puts the 618 fib right at the 9,800 level. That 9,800 level, 618 fib, right at the bottom of our green shaded area, right at the 100 period simple moving average. So all this to say, I don't think you want to go short right now. I know it's been going down for several days now, but I just don't think that this is an opportunity to go short here on the U.S. franc, as we have a lot of things going against that. We have the correction, we have the Fibonacci, we have the 100 daily moving average, we have historical resistance back here on the left-hand side of the chart that offer a clue to support. That's the green shaded area showing us historical resistance along that green zone. So 9,800 price level, just a difficult place to go short. Even though it's been going down, I'm simply viewing this as a correction, and maybe eventually we start to see a rally back higher, pushing back above 99, starts to see rising lows and rising highs once again for the U.S. franc. Moving on to the euro dollar, very similar yet opposite situation. Of course, over the past several weeks, or a couple of months actually, we saw the market falling from the 1.15s all the way down here into the 105 level. Over the past several days, starting with the ECB, we saw the move higher. Again, is this simply a correction for the euro dollar? Because simply the euro is still fundamentally a weaker currency pair than the U.S. dollar. So with interest rate news and the raise of interest rates, you would expect that we could see a little bit of a rally for the U.S. dollar against the euro as we look for it to go back down. Similarly to the U.S. franc, we have Fibonacci from the high down to low. We show the 50% retracement level right here at 1.1004. So we can see that right in the middle of that blue shaded area. We also, just above the market, have the 100 period simple moving average into the upper 110 50s or so. We can see that there. So the blue zone is our resistance based on the moving average, historical support congestion around there, 50%. Now, of course, the purple zone is where the 618 fib is, and that's a little bit higher than the current market. That would also run into these historical supports. Wouldn't rule out another rally higher, but again, we could simply be viewing this as a correction before FOMC. We'll watch for lower highs and lower lows to give us a clue that the market is turning back into a downtrend. But at least right now, a difficult area even to consider going long, because we are running into a pretty critical area for price level of resistance for the euro dollar. Moving over to the GBP, we've also seen that correction higher. We've seen the market moving higher with the news out of the UK this morning. Already we've seen the market pushing back down, the BOE sending this back down towards the 5120 level. So is the correction over? We've reached the top of our channel, the top of our range that we've been talking about between the red and the black line here. We've reached the top there. We talked about this during the trade room yesterday, the 1.5180 to 5200 level as a potential resistance zone. If you happen to take into a sell there into the resistance zone and into the red trend line, you're now into profit. You should be protecting that profit. Let's go ahead and zoom it in. I've got a couple of Fibonacci retracement measurements put on here. We went from this high right here where the black X is and this high here. Both of the black X's, those highs down to the current low. That puts Fibonacci squarely right here inside the orange shaded area. So we talked about that yesterday as a resistance. So if, again, you took a short there into the resistance, into the top of the channel, you're now into profit. You should be protecting profit. Now, of course, today, with that fall, we've now challenged down into the support. So we'll be watching the 5100, 5125 level as a potential support for the day today. That becomes a potential support for anybody that's in a sell and a target. If you're not in a sell, this does present an opportunity to go long, but just remember, we are at the top of our range, the top of our channel, the red trend line. And we are running into that barrier of resistance. Unless it breaks through there, we can't really expect a continuation of the trend. Interesting enough, 100 period moving average, much higher than the current market. So definitely a possibility of going higher, but it would need to break the top of the range. If you're looking to go short, a difficult place to do it right now, as long as it's underneath that blue or on top of that blue shaded area, would likely look for it to rally back to the orange zone again before you go short, to provide lower risk and higher potential reward. If you're looking to go long, blue zone becomes that spot. But remember, we're looking at potential correction here and the possibility of this going back down with the FOMC next week. USCAD, similar situation that we've seen across the board. We've seen actually the US dollar taking a pretty good run over the past few days. USCAD getting weaker. Past 2 days, just a little hesitation up here, just underneath the 1.3600 level. I still think that this is a long currency pair. Definitely would prefer to go long. The preference, actually, though, is for it to fall first to go before we go long, all the way down to 3,400. I don't know if we're going to even see that. Right now, 3,500 holding as our barrier of support. That's that little orange shaded area you see right there. So as long as it stays above 3,500, we could be looking for just the continued rally. And, of course, with interest rate the FOMC next week, we could see the breakout above 3,600 and the continuation of the rise here. The only thing that changes this picture for the short term would be a breakdown of 35 heading back down to 3,400 for the US CAD. US yen, of course, significant fall. We finally broke out of our range. We were stuck in this range for about 4 weeks. Finally broke out of it. Unfortunately, we took another buy into the bottom of the range just in time for it to break out. Limited risk. It was very small risk on that trade. It has pushed lower, by the way, back down to the 100 period moving average. The last time, or not the last time, a couple of times ago when we touched on top of that moving average, you can see the rally all the way on the left-hand side of the chart. It rallied higher. Then we saw this time right here break through it and continued down. Here we broke above it and went back up. So we're right around that 100 daily moving average here. So definitely watching for clues to support and reversal. You know, again, correction, a possibility here for the US yen, waiting for FOMC coming up next week. One last thing, let's take Fibonacci from this low right here in the middle of the chart to the current resistance high. 50% retracement level of that run sits right here just underneath our orange shaded area. So I'm expecting, at least for now, expecting this as a correction, looking for the reversal. I'm looking at this area right around 121 as our support today. Not a great place to go short to begin with. Not a great place to go short. It would need to likely rally higher into the 122 level before I would consider this an opportunity to go short. So not really a place I'm looking to go short. Possibility of watching for support reversal for the US yen. Australian dollar, of course, we've been talking about the triangle pattern. Downtrend, black trend line, red trend lines at the very bottom of the chart is the triangle pattern we've been discussing. Back to the daily, there it is right there, the two red triangles. We saw the rally over the past several hours, a push from the 100 daily moving average, by the way, here at the 71.90 level, the orange shaded area. We've seen the rally on news yesterday. As I mentioned in the live trade room yesterday, before the news, before the Australian news, it would be likely that I would remove the pending order, and I did that. I took the pending order that we had off yesterday before the news, so it didn't take me in. And we can see the rally back up here in towards the 7,300 level. Same thing goes today as it was yesterday. As long as we're underneath 73.40 or so, 73.50, the purple zone, I still think that this is a sell opportunity closer to the resistance level. Only if it breaks out above here do we look for it to go higher. Again, FOMC next week would expect maybe this to take another slump all the way back down to 7,100, which is the bottom of our triangle pattern. I would think today the failure of that purple shaded area becomes the main focus here for the Australian dollar. Failure of that purple zone becomes resistance and a selling opportunity back closer towards the 73.40 level, as close as possible to 73.40. The risk is that it breaks above that purple zone. I'm not looking to go long here. Even though we've seen a little bit of a rally, I think this is more likely a selling opportunity into the top of the triangle pattern. And lastly, New Zealand dollar. Of course, we had interest rate news. We saw a spike lower and then a rapid reversal as it went back up into the resistance highs, into the 67, close to 6,700. Quite volatile, as we were expecting. Quite a lot of volatility. I don't think that we could classify this now as an uptrend, but I definitely know that we have some volatility and the possibility of even challenging the longer term trend line up here towards 6,800. Take it out to the weekly time frame. You see, actually, let's zoom it out one time. You see where that weekly time frame trend line, the red trend line coming down from the top. Remember, there's many times in history where you see a rise and you think, hey, that's going up right there. Maybe it's an uptrend, and then it turns right back down and goes back down. So don't get caught up in thinking this has to go up because it's going up right now. We could run into that trend line and just start working our way back down. So keep that in mind. Back to the daily time frame, I'm looking up closer to 6,800 as the resistance. That becomes the potential reversal point. Remember, interest rate cut yesterday out of New Zealand, and the interest rate raise out of the US dollar out of FOMC next week would definitely have a bearish expectation with that fundamental analysis. Watching, though, potentially 6,800 as the resistance for the New Zealand dollar over the next several days.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.